Max, welcome to the Market Masters podcast. How are we doing?
Doing good. Finally, we are here. Excited for this call too.
Me too. And I mean, I'm super excited because I know we've already spoke about it before the session, but that background is one of the most impressive backgrounds that I've ever seen. And I think what we're going to do is we're going to give everybody a little sneak preview of it. We'll do that a little bit later on, but it's it's one of the best backgrounds I've ever seen on a call.
Yes,
Can you tell everyone where you are, where you're based at the moment?
So I have two offices. One office is at Beursplein 5 in Amsterdam, and that's the stock exchange building. So this is where now you see some screens behind me and the big building, but back in the days, this was the place where everyone was yelling. It's like the Wall Street, but then in Amsterdam. So I think Frankfurt has like a big building like this. London probably has one, and this is the Amsterdam one.
Yeah, it's like the pits in the old days, right? I mean, it's a super impressive background, and I mean, compare it to mine where I'm just sat in my bedroom. I mean, I've got quite high ceilings too, but I don't think they're not quite as high as yours. So let's jump straight into it, Max. Let's talk a little bit about you. I want to know the journey to how we got here today as a trader, like some of the trials and tribulations that you've been through in the early days, how long you've been doing this. I'm going to hand the mic over to you. I want to know everything.
Cool. Yeah. I hope you have some time because it's quite a long journey. For the past 10 years, I probably had more failures than most people try. That's always what motivates me, like try everything and keep pushing. And that's the short summary of my journey. 10 years ago, I was studying finance, and I met one of my good friends now. And yeah, he was already working at the fund, also studying finance, and he more or less introduced me to trading. He gave me a little book called Forex for Beginners. But back then I didn't know, like, do I trade FX? Do I trade crypto? Do I trade stocks? Well, crypto wasn't really that known yet. So it was not that I started with crypto and did buy Bitcoin at 2, right? Unfortunately. But that is how I got started, like reading that book, being introduced by the markets on university. Not that you learn how to trade or how to invest at school. I don't believe you really learn to make a return on your money there, but it was nice to be in that environment. And then I joined a course. That was back in 2016, 17. I joined a course, a community, and that is where my journey started, when I started to trade manually. And yeah, should we dive into that?
Yeah. I mean, go ahead. I want to hear. I mean, obviously, I know that you don't still manually trade, so we'll get into that in a little bit more detail. But yeah, talk about the early days, how you got from, starting out as a manual trader to where you are now, which is building algorithms, right, and trading automatically or automated.
Yeah, so
automatically always sounds weird. Automatically is not the right word. Automated is.
Oh, mate, there are so many words. Like, I don't like bots, algorithms, like everyone had expert advisors, like just choose the name, right? So if we go back to that start, when I was introduced to that trading community, I learned everything, all the basics, right? Everyone learns at baby pips and all those things, like what is a pip, what is a trend line, what is support or resistance, what is structure. And that's how I got started as well. But we decided to invest in a community. And that's where I learned more or less support and resistance using the daily time frame, weekly time frame, and monthly time frame, and see where price is likely to reverse, and then trading that pullback. Very common trading strategy, I think. The only unique thing was it was quite mechanical, so meaning very rule-based, but that was more on the lower time frame. So we timed our entries on the 1 hour and the 4 hour time frame, and then we used that higher time frame bias. So for the ones listening, maybe it sounds a little bit complex, but it was using all the time frames together and then figure out, okay, what's likely to happen next? What is the path of least resistance in the markets? So by doing that, I did see some consistency, and I was looking around, okay, how can I scale this? How can I make this bigger? Because at a young age, you don't really have a lot of savings. So you need to find capital, right? And prop firms didn't exist. So when I did find some results, I looked in my network, found one entrepreneur, and he was just looking on a sideline like, okay, what the hell are you doing? He was not in finance, just a different company. But I was like thinking, okay, what if he can watch over my shoulder and see me maybe perform? That was like what I was thinking, like, oh, I know how to trade. I'll perform good. And then I can ask him for funding, trade together and take like the private funding route. So that's what I did. And then we figured out that support resistance was too subjective to really scale it. It was like with your eyes closed, you can place your lines everywhere and then still they are rejected in the markets. So we had to make it more mechanical. And that is when I got introduced to mechanical trading, really rule-based. And we took the step to find a different solution for that higher time frame bias. And that was with supply and demand zones. We built some indicators, and I'm not a coder or developer, but I had to automate some of my entries and strategies just to make it rule-based because with all the doubt, I didn't really like to scale. Like, what if I trade 1 million, right? And I'm thinking, is this a valid trading setup or not? That's like what bothered me a lot. So then I moved to supply and demand trading. That worked well, had some results. I did sign my first investor. First of all, I took a big risk, took a loan there. I don't, it is not the best thing to do for many people. Luckily, I was hovering around break even, and then I had a very good run because I did find that consistency with support resistance already, but with a lot of question marks. And then the second step was that supply and demand. And then I made, I think it was 30 or 36% profits, and then paid off that money because I didn't want a loan. And then we scaled from there, better agreement. And that allowed me to break a little bit free and really focus after next to studying to, okay, what do I want next? So that was my manual trading journey. And that is how I moved from subjective trading to a more mechanical approach. And should I continue with this trading style?
Continue. I want to hear how we got from there to how we are today, where everything is fully automated.
Yeah. So what we did was, find more investors. And in the meantime, I moved to the south of France. I lived in Nice.
This is still whilst manual trading, right?
Yeah.
Okay.
Yeah. So I wasn't introduced to automated trading yet. So this was in 2019. I lived there, and back here across the Netherlands and not in Amsterdam, we started a little startup. We want to start a fund in the Netherlands, and we combined a group of traders, or I didn't do that, but I was approached by someone that just decided, okay, let's find some good traders in the Netherlands. Let's group them together, get a nice office, and let's see where it goes. So they were raising capital and we were trading, and I was just one of the traders in that group. Unfortunately, I was also living in France, so sometimes I had to fly back for the meeting, so I wasn't that involved. But I learned a lot about how they dealt with investors, how to build a portfolio, work together. Unfortunately, our mission statements were definitely different, and everyone had a different vision. So we had a lot of captains on a ship, and that doesn't work. So that startup failed, but I learned a lot. So that is, meantime, I was still trading supply and demand strategies. And then I started my own investment vehicle with that friend of mine that introduced me to the markets, and then that first investor. And then from there, it was like, okay, let's properly set this up. A lot of regulation stuff, like you're from the UK and you know how it works there, but also in the Netherlands, it's like really a pain. But after more or less 2 years, we got that all settled. And then we were looking at, okay, let's hire some traders because we have one trading strategy. I'm trading that myself. That is not diversification, right? It's not a portfolio. What if my edge disappears? What if I stop trading or it stops working? And that fear is not really how to build a business, in my opinion, because then you scale and then you're left with nothing. So we were looking to hire one other trader. So he approached us, and in that meeting, he introduced me to no-code automation. So how to build algorithms and just automating your manual trading style. And I was like, this can't be true, right? I cannot just take my mind and put it in a computer and then lay on the beach, right? This doesn't make sense. But we hired the guy. It's a good friend of mine as well now. He has been working with us for 4 years or something. And then I was introduced to automation. So that's where we made the jump. And sometimes you have something in your life that's an idea or something that sparks and ignites a fire. And that was definitely this. Because for me, this is the future. I already had spoken to a lot of professionals and they all do everything automated. I was like, why? And is this possible? And I'm not a developer, like I said, I'm just a manual trader. So being able to then every manual idea I have in my mind to place that in an algorithm and test that is really what changed it for me. And then the big algo production started. So that's how we moved here.
I think that's super interesting, right? Because you said, and I know you said it like sort of tongue in cheek as a joke about automating everything and lying on a beach, but actually it's a lot more work than that, right? Building a portfolio, managing the portfolio, testing ideas, putting them together. Like sometimes you'll spend hours, if not days, putting strategies together, testing them, only to find out that there's no edge, or it was I don't want to use the words waste of time because I don't think the time was wasted, but it might be, oh, I've got this fantastic idea for a strategy. You build it, you then test it, and you go, oh, well, that was a waste of time. I thought it was going to be something, but it's not. And for the people who are watching this but aren't aware, I mean, a lot of the guys who are watching this who will also watch the weekly sessions that I run for Darwinex Heroes. So they will know this about me, that I actually followed a very similar path to you. That you already know this, Max, as well, but I 6 months ago transitioned from being a full discretionary trader to trading solely automated using no code block builders like FX Dreamer, Profectus AI, which we'll get onto in a minute. And I can kind of attest to everything that you're saying because do you know what? I'm going to shut up. I'm going to stop talking. I want you to tell me about it. So let's go into a little bit of the building blocks. So you say that you're not a developer, yet you're trading fully automated. You have PYE, which is your Darwin that has a 4+ year long track record. Let me double check.
Yeah, it's
so
true. That's just
3.5 years.
To be honest, if we talk about that, that's just one algorithm that we have running on Darwinex. And that is indeed something we built quite early. And yeah, that's fully automated. That is literally doing everything on its own without we ever changing something, which is weird. Coming from a manual background, right?
Let me just pause it there for a second. I'm going to bring it up on the screen. Share screen, because we can go through all of your Darwins. Oh, there we go. So I brought PYE up on the screen. So this is the Darwin that you started with, right? So this is that, like you say, the strategy that you built at the beginning. You never touch it. You just leave it and let it do its thing.
Exactly. Yeah, this is just one of the strategies. To be honest, Darwinex wasn't like when we put this on. Yeah, I think from the start, right? Yeah. So we didn't really know a lot about Darwinex yet. It was a time, of course, where a lot of different companies came together the past few years. So it was like, okay, this seems cool. Love the idea. Let's just get an account up and running, upload an algorithm, or at least upload the algorithm to a server. Let it run here and let's see where it goes. And that's exactly what we did. We are thinking of just moving or creating or enhancing this portfolio with everything we got to really increase the performance. But it is indeed, for us, this was proof of concept for Darwinex. So normally you have the other way, right? It's like a trader needs to prove if the platform is nice or if he can trade capital for someone else. And we were like, okay, do we want to scale with Darwinex? And we love it.
Well, I mean, like you say, right, you're not touching this strategy at all. And I mean, we can go over this and any other strategies that you have in a little bit more detail, but I'm presuming that you just put this together in 2022 because you what year was it that you got introduced to the guy who introduced you to automated trading? Was that towards the back end of 2020?
Yeah. Yeah.
Okay, so you hadn't really been trading fully automated for that long, right? So you were kind of still new to this, I guess. Is this a single strategy or is this a portfolio?
Single strategy. Yeah.
Oh wow.
This is
Okay.
one of the first things I made in one of my first months, to be honest. Yeah.
Okay. Do you have any more Darwins, or is it just this one?
Just this one, but
Okay.
more will come soon.
Okay, but I presume external to Darwinex, you run portfolios, right?
Yeah. Yeah.
Yeah. So talk to me a little bit about the difference between running a single strategy like PYE to actually combining multiple strategies together to operate as a portfolio.
Yeah, sure. So what you first do is, of course, create an algorithm and then backtest it or test it over long term historical data and see, by the way, is the sound annoying? Or,
No, fine.
all right. So what we do is we backtest the strategy on an individual pair. Let's say you want to trade euro dollar. Then you build a strategy just like you're trading manually, but then you automate it. And then the algorithm runs on that chart and takes the trades, manages the trades, and does everything on its own. Well, then you have a backtest of one pair, just euro dollar. You can do the same on Bitcoin. You can do the same on the S&P 500. And then you have some diversification in markets, which we recently did. Like last year, I also added crypto algorithms. And recently, the past few months, we are also trading the S&P 500, also with our algorithms. And that is more diversification. And that can be considered all in one portfolio. But if we go back to that individual test on, let's say, euro dollar, maybe that strategy also works on gold and pound dollar and dollar yen and pound yen. Then you have a lot of backtest reports and we put them in one group. And then you see for one strategy, what is the performance? And you can call that already a portfolio. For us, that is just one strategy with a set of rules, and that's it. Then you have another strategy. Maybe you have one trending strategy. This is a breakout strategy, this Darwin you see. And maybe you also have a mean reversion strategy. So when the markets pull back, like how I used to trade manually, that's a mean reversion strategy. Time the pullbacks and then trade against the trend. Well, if you have a trending strategy and a mean reversion strategy, you have a nicely balanced portfolio already, because if markets trend, you bank the big risk to rewards. If markets don't trend, you lose those trades, but your mean reversion strategy works. And that's how we approach portfolio building, is to look, okay, do we have a trending strategy or a mean reversion strategy? What pairs do we trade? What's the correlation between those? For instance, if you have like dollar yen and pound yen, it's very likely that if you have a breakout strategy, you will have dollar yen buys and pound yen buys at the same day, right? So it's pretty correlated. It's almost impossible to see like a dollar yen buy and a pound yen sell if you trade breakouts. That's just not how markets behave. Yeah. And then, that we have a lot of strategies, around 20. We threw them all together in a portfolio, measured the correlations. Do the strategies help each other or not? Is the max drawdown increasing or decreasing if we combine them? We always risk the same amount of capital per strategy. So let's say you take 1% risk per trade. Every strategy should do that. And because, the reason behind that is you don't know if your best strategy stops working tomorrow, right? And then if all the risk is there, well, and it loses its edge, then you lose a lot there. So we always balance out the risk per trade. And then if FX doesn't move, which happens quite often, especially in the summer periods, then you better also diversify to other markets. And that is what we did. And the crypto diversification is performing very well for us. I'm very happy with that. And now also
is that mainly breakout stuff as well on the crypto side?
High risk rewards, just breakouts. Like this strategy you see here, almost similar we run on Ethereum, for instance, and it is so much better than on FX. So that's cool. So it balances it out. We want to approach all the markets, but that is new. So I cannot tell you a lot about like trading stocks with our algorithms, because that is, yeah, I don't feel comfortable sharing that if I don't have years of experience with it. But
Of
crypto
course.
so far, the year is great, and FX is where I live, what I know.
Yeah, I think FX is a funny one, right? Because there's not generally when it breaks out, there's not much volatility and it likes to mean revert. I found personally the the best breakouts are on inside days. So I have a couple of strategies running on an inside day break. So when there's an inside day, it'll just buy stop and sell stop, but on FX pairs with a negative risk to reward. Other than that, I really struggle to get the breakout strategies working on FX the way you would on indices or crypto or something like that. It gets a little bit more juice when it takes out a level, right?
True, true. Yeah, breakouts. Yeah, it's. I do think breakout strategies are the easiest. I would always recommend someone to focus on breakout strategies first.
Mm.
Also, a common strategy. I always, if someone asks for, like, do you have a strategy I can check out and work with? It's a simple Asian breakout strategy. So I can quickly describe for the ones that want to build it and trade with it. It works on dollar yen since 2004 till now. If you backtest it, it's just a very interesting and good strategy. What it does is at 6 in the morning, pre-London session, it looks back at the Asian range. So it looks back 6 candles, so 6 hours. And then you plot on that high of that range. So it can be, whatever the high is. You take the breakout in the upcoming session. And that strategy is super basic, super simple. I traded with a high risk reward and a trailing stop loss, but also people traded with a fixed risk reward of 1 to 2, 1 to 3. Whatever you use, you will see very interesting results. And that is how I like my strategy. So simple.
Why
And
do you think that is? Why do you like simple strategies over some complex master algorithm?
two things. The biggest thing why I automate strategies and the core philosophy I have is speed wins and volume wins. So the faster I can build, the
Yep.
more strategies I can build and the higher probability that I find a good one. So speed is important. Therefore, we no code. We don't code manually because, well, if you have to manually code all the strategies I create in a week and our team creates in a week, you'll need years. So speed is solved by building a lot of strategies. And then, the more strategies you build, the higher the probability to finding something. So if I decide to build a very complex strategy, my speed decreases. I go slower with my development process. Because if you tell me I trade all these time frames, and when I see all these concepts, right, we know them, fair value gaps, just the trading styles, ICT, SMC, supply and demand. If all those complex things, I can automate, and we have automated this. And over the years, we have learned that it is too complex to really be great. It slows me down a lot. So my volume will be less. I will not be able to create 100 algorithms. I can only create maybe 5, right? And what is the probability of those 5 strategies to be successful? Well, the same as all those 100 simple ones. So it doesn't really make sense in my head to focus a lot of time on building complex strategies if the probability of success is as high as a simple strategy. And that is just based on our experience, right? So that's the secret there. Keep things simple so you can build fast and you can test fast.
Yeah,
Does that
I
make
completely
sense?
agree with that. It's all about efficiency, right? And again, going back to what I said earlier, where it was like wasted time if you build out an idea and realize there's no edge or there's little edge there. At least if you're doing things quick, you find it out quick, right? So like you're not going to spend weeks and weeks and weeks building thousands of lines of data and code to test it and be like, well, that was weeks wasted. It might take 5, 10, an hour, of your time to build the strategy, which I want to talk about a little bit because again, you mentioned you're not a developer. So tell me how you get into coding algorithms if you're not a developer.
Yeah. So the whole approach is, um, And I think it's luck. Like I just talked about speed, right? Being able to build fast. I never knew that that was the key. I didn't know if building a strategy was difficult or not difficult to deal with the developer.
Mm.
I did hire at the early stages. I think that was in 2020. I did have some people build strategies for me to see that. And that was really not the best way to go, because you pay someone to build a strategy and it just takes a lot of time. So then when I started to work with someone that could no code, that could build strategies, then it was for me very easy to learn that. It was like, okay, I need to master this. And I didn't have the development background. So the only thing I know was markets. Like I know what markets tend to do, but that's it. And so I had to learn that skill very quickly, in my opinion. And I had the freedom to learn it, right? So for me, it was in a month, I was able to more or less master it. It took me a few months to really know everything and the mistakes I made during the process, but to really be able to confidently say I can build almost all the strategies you see out there on YouTube, well, everywhere. That happened rather quick for me. So that's what motivated me to just be able to find an ID, build the ID, test the ID, and then run the ID. That was the only thing that mattered to me, and I'm glad I did.
And I'm glad you did too, because I think there's a weird chain of command here that if you didn't trade algorithmically, the person who told me to trade algorithmically wouldn't be trading, and therefore I wouldn't be doing what I'm doing now. So I kind of have to say a thank you to you, because there's this weird chain reaction. And again, I attest to everything that you say, experiencing it now, and I'm kind of fresh to the game, right? I've only been doing it for 6 months. I've seen fantastic results. My learning curve has been kind of very, very fast and quite brutal at times, similar to what you're talking about. But I think it's so fast because you already have the prior knowledge of markets, right? So you can generate an idea, I can generate an idea, or we can find ideas and we understand what is going to work. We know the mechanics of the market, like you were talking about earlier. We know what a pip is, we know what slippage is, spread, all of these kinds of things that when you're building a strategy, if you were brand new to the market, you wouldn't know that spreads might blow out on your broker during rollover on the night. So you might not have the know-how to put a blocker at that time of day. Do you know what I mean? So I think that's why it feels so aggressive that you go, wow, I'm only a month in. I think I had 8 strategies or 9 strategies when I was a month in, all running in my portfolio. And I was like, this feels too easy. Like it generally felt like too easy, a bit like what you were saying. Surely there's more to it. And over time, what I've done is I built roughly 15 strategies. They were all okay. They weren't great, but they were okay. And then that got me from point A to point B. And I said, okay, I actually understand what I'm doing now. I understand how to build strategies, refine them, test them, Monte Carlo them, out of sample, all of these sorts of things. Now I'm going to go back and I'm going to build them all again, but better. And then I did that, refine them all and refine them all and refine them all. And I run about 27 now. And that's only 6 months in. But that was like some real steep, aggressive learning curve.
Yeah.
So like I
Yeah.
said,
So
I understand everything that you're kind of talking about here.
let's dive into that process of building, because it's so important because you have a different approach than I have. It took for me quite long until I had my first strategy live, right? Our process is as follows. You have an idea. It doesn't matter what the idea is, but the only thing that matters is to build it fast and have something to work with, like a prototype. Normally I have the saying like, before you if you build a car, don't make the car look beautiful. You just need to figure out if it drives, right? A lot of people also start their own business. You have a startup, you start a business, and the first thing they do is to do all the things that don't matter. What matters with a business? Supply and demand. Do I have a product or
Yeah,
service that
making
people
money.
want? Yeah, really, is there something here? And that is also with our building. We get an ID. Okay, is the ID good? I don't know. Sometimes I think it's bad, and then the equity curve is good, right? So no one knows, right? So you get the ID, then you want to build it very fast. Doesn't matter if it is fully working. Just build it fast and run that first backtest. And then that first backtest is super raw. No weird filters, no trend filters. Like we only trade in that direction, just buys and sells, keep it raw. What I do is find the best stop loss and the best risk to rewards. That's like the first process. Because that you can test that really fast automatically. Of course, the computer will test what is the best stop loss size and target. And if that test is done and my profit factor is not higher than 1.15 or 1.2, then that strategy get placed in my documents with that description of it was not above that profit factor, leave it. And then I move to the next one. And that is really how I filter out my IDs, because I have a million IDs I want to automate. I've been doing this for years, but still it's endless. The flow of IDs to automate, like you can build so many strategies. You need to cap that. You need to stop that ID flow and really build fast, see if it works. And when we do hit that strategy that is slightly profitable with that profit factor, then dive into it. Then add multiple management styles, add the filters you want, the creativity flows, and then spend some hours on it and then test it. And then from there, when it all passes our testing, then we look at the build again, the algorithm, and then see, okay, how can we build this safely now for the market? So indeed, a spread filter, like you said, you don't want to have your account blown by spread or something, or other mistakes you can make. There are just a few you need to know. And with backtesting, I don't care. So I'm not wasting 5 minutes on building that in my strategy because I don't even know if my card rides, right? My business has some demand. And then after that testing phase, after all the backtesting and the reports and all that, you see, okay, the strategy is profitable. I want to run it. Then you go back to the build and you see, okay, how can I make this safe that I actually want to run it? Then you run it on a small live account, just in a good environment. You run it on a small live account and then you let it run. And if it's a day trading strategy with a lot of trades, you don't have to run it for that long because maybe in a month you have 30 setups. Then you analyze those 30 setups quickly, manually see, was my management style executed? Was my algorithm not doing weird stuff? Is it all good like the backtest? And that's normally the case if you build it the right way. And then you scale. And that's our process. So to go back to why I didn't start with a lot of profitable strategies or with a lot of strategies at the beginning was I made so many mistakes in building that I then ran it forward or just on a small live account that it wasn't really, my process was not good to have results there. So I never really had a big start.
See, that's super interesting, right? Because I completely agree with what you said about, making sure the inside of the car is just as good as the outside. And actually, this is a conversation I had last week. So when I first put my portfolio together with those initial strategies, I had a gold breakout system that was just awful, right? It wasn't awful, it was profitable, but the profit factor was like 1.1. It wasn't the best. It was doing all right. And then when I set it live, it went on an absolute tear. Like I'm talking, it wouldn't lose. It just kept winning and winning and winning. And I feel like I got really lucky. And after it had blasted for a few weeks, I sat back and I thought, even though this is good, even though it's made money, this is completely different to the trajectory of all of my testing. It's not reflective of what I'm seeing. So I pulled back on that strategy. I ended up closing it down. I was like, I'm not taking this as this is a golden goose. I'm taking it as it's just not reflective of what I know about the system. So I ended up pulling that strategy back because it was trading breakouts, 5-to-1 risk to reward. And just luckily it just kept hitting that 5R. I think it hit it like 4 times in a row within a couple of weeks. And I was like I felt like a genius. Whereas now, like a lot of my strategies have had, like you say, those hours put into it where I always say I try and break the strategies. I don't try and make them work. I try and just batter them to the point where they crumble and don't work. And the ones that continue to work, I'm like, okay, you've made the cut. Whereas if I can find a way to break you, whether it's changing certain parameters slightly, like if you drop the stop loss by 0.1% and it just blows the strategy out, I'm like, maybe the stop
Yeah.
isn't that great after all, or if you run it on a different pair, like from EU to GU, and all of a sudden the let's say an EU, it's a massively winning strategy. You put it on pound dollar, something that's fairly correlated, and then it just goes to zero. I'm sort of like, okay, there's a discrepancy there as well. So I just try and break everything that I build. I think that's the best mindset that I found, because at least then when I put them live, I have a bit of confidence that the strategy survived me trying to break it.
That's a good way of putting it. I think how I also see it is being a scientist about it. You also hear a lot of stories like that. We are not scientists, right? But if you sometimes listen to a podcast or something and it goes about science, a lot of the times one scientist is just very skeptical of the other one, and it's sort of a war. Everyone is checking each other, and it's not like it's not that much of a friendly environment. As an outsider, I see that, and I think that approach to the markets is very beneficial if we take that approach. So whatever strategy, if you give me a strategy, I like you a lot, mate, but I'm going to test that strategy. And then the data will say, and then probably your backtest is the same as mine. So then we agree on something. And I think that is not really happening in the trading industry right now, that we really take that approach. It's less data. It's more like, who are you and how do you look in the trading industry? But it is a data, like this whole building is built over these years, or filled with people that base most of the things on data, right? So I think we should be more like a scientist approaching the markets than, being emotional about it.
How much do you think that emotion factors into traders struggling to get to their end goal, right? So I presume every trader and everybody who's listening to this, if they're not already profitable, their end goal is becoming profitable, right? And I know for myself, when I started to leave discretionary trading and adopt the automated trading approach, it was like an ego gut punch. I really struggled to accept that in my head, and I'm not very emotional as a person when it comes to trading. I see it as a way to make money, nothing more, nothing less. But it still gave me a gut punch, thinking I've spent 7 years trying to learn how to trade, and I'm about to drop that all in the bin and automate everything and do it a completely different way. But how much do you think that affects people moving forward to gain to their end goal, just being emotional and having that kind of, instead of the scientist view, it's, well, my strategy is better than your strategy because of X, Y, Z, or this person taught me.
Yeah. Sorry, I didn't hear the question, but you dropped a little bit.
Oh, sorry. So I was saying, like, when people have the ego, right, or like you say, my strategy is better than your strategy, and the environment becomes a bit toxic, how much do you think that steps in the way of somebody's progress and stops them getting to their goal of just being a profitable trader and caring less about what other people are doing?
Yeah, it's a good point. I think if I could go back in time, I desire to be learning what I do right now earlier, obviously. So if I could tell my old self, like, just start with this, but also I love all the experience I gained from manual trading. So it's like a two-way street. I don't know if I would go back and just go this way, because maybe all the ideas I gained from manual traders that I've now automated, maybe I didn't have those ideas, right? So I find it's very difficult to look at my own journey. I think, okay, was this the right path? Or of course it can always be quicker and better, and I still have a lot of goals I want to reach. But the second thing with ego is, I think a lot of people marry their ID. So they marry their experience and their strategy. So yeah, I've also studied strategies for a year and spent a lot of time on those strategies. And I never look at those strategies again. So is that time wasted or not? That's the question you should ask. Like, how can I use this experience in a better way? And can I automate this and maybe form something better? So I think ego is very important and holding a lot of people back to not take a different approach. Like, if you come to me, Max, you can change this and this and this to improve your performance, I'll listen. But a lot of people won't do that because they have that bias, or they married that ID or sort of that image, right? So it's important how I solve my manual trading for if you're break even, you're just trading manually and you still want to grab some value here. How I solved that was taking a more mechanical approach, and you couldn't do that manually. Of course, you cannot trade while you sleep, so you will have less performance than if it is automated, but you can still make it work. And that is just figuring out, okay, if you miss a trade, because that's the biggest thing, there are 3 reasons why you missed a trade. The first one is knowledge. You didn't know that it was a trade, so you just missed it. And then a day after you figured out a big move that should have been a setup, that's knowledge. Knowledge can be solved by just learning and practicing, and that will take some time. The second thing is routine. Did you watch the charts at that time, yes or no? If you missed that trade due to your routine, then it's not really a missed trade, but you might see it as a missed trade. So if you then backtest and that trade happened during the Asian session when I'm nicely asleep, then you know, okay, I'll always miss those trades. So filter that out of your backtest, right? So a routine can also be fixed. And the third thing is confidence. If you're in drawdown and you're busy with maybe a prop firm challenge, or maybe you trade private funding, or you get funded by Darwinex, you're in drawdown, you're more emotional, right? So do you take the next setup? The next setup, which probably banks that 5R or that 10% or whatever you have said. If you don't have the confidence solved and you miss trades due to that, you have to fix that. So to summarize real quick, if you are not profitable, look at why you're missing those trades and use those 3 things like routine, confidence, and knowledge. That's how I solved, at least go from break even to some profits with manual trading. And then algorithmic trading it always is confident. And it's always trading. So it's solved.
It doesn't care.
Yeah. And the knowledge is also there because you programmed it to do it.
And so I want to move on a little bit now to Profectus, right? So I know you can probably talk about Profectus all day long. So Profectus AI is a company that you built, you've spent the past couple of years building. Give everybody a 2-minute explanation of what Profectus is, because I want to kind of go back to the building blocks and the curation of strategies and portfolios.
Yeah, so Profectus AI is a software company we started, I think 20 months ago to build it. It's finally live and launched a couple months ago. And what it does is it is the easy to learn drag and drop software to automate any trading strategy. And it works now on MetaTrader. So if you have a trading plan, you probably use TradingView to analyze the charts. That trading plan, if it's in your head, we help you to automate it. And with Profectus AI, everything is in blocks. So you connect the blocks. It's just a no coding drag and drop software. And then you click on export and you get the algorithm and you can backtest it. So in a nutshell, it's a simple software solution to help you as a manual trader automate quicker without having to code, because that takes you years. And eventually when you can code, it's still not fast, right? And speed is the king. At least that's what we believe, and therefore we spent a lot to build this company and get this software out there. Of course, we use it daily as well, and it was created more for ourselves instead of for the rest of the world. But now it becomes very interesting also for the rest of the world. So I really want to make that clear. You can just build anything you want. You just have to study the skill of building.
Yeah, and I think you nailed that really well there. So the idea, right, and I use these myself, and I've also used Profectus, and it's by far the prettiest app, let's say, and kind of the most modern one that I've used. The idea is that you can drag logic into steps, right? So you can say, if this happens, then move on to the next piece of logic. So for somebody who is new to automated trading or new to coding and they don't really understand this kind of logic, it's to say, if this happens, if it's this time of day and then this happens, maybe the RSI is above 70 or below 30, then look at these 2 different bits of logic. If the RSI is above 70, then we look for X candle pattern, then you want to sell. And you can put all of the ideas that you have in your head where you go, well, I wouldn't be able to code that. I wouldn't be able to get that down to a mechanical strategy, but generally, if you break it down to the different pieces of logic that come into it, everything has a way of being automated. So I used to trade key levels, like you say, very support
Yeah.
resistance based, but I would trade a break of period of time and a retest. Now, when I look at a chart, I go, I can't really automate that. But actually, if you break it down into logical steps, you go, is there a breakout of, the previous bar high / low over X candle period or X time period? If there is there a period of time before we reach that level again? How far the price moves above or below that level? Like when you break it down logic step by step, it's very easy to automate every idea. And that's what I'm starting to realize now. And so I think with I can code. I'm not very good, but I can code. But I would not waste a single minute sitting there coding a strategy when I can have a platform. Even if you charged me, I don't know, £500 a month. If I was making money on my trading, I'd be like, I would much rather do that, drag and drop some ideas, test them, and it take me, like we were saying, 5-10 minutes to build a strategy. So how
Yeah.
did you, I know you say you built it for yourself. And obviously it's a commercialized business now where you're offering it to clients. How did you come about with the idea of building Profectus? Like what sparked that initial, let's build this platform?
Well, when I was introduced to no coding and building strategies, I did use other platforms, of course. So I was like, this is cool. This is kind of the idea we need and how to do it. And it helped us. We use a lot of platforms. We still use also other platforms, but it was not good enough and easy enough in our regards that we could really scale this and help a lot of people with. So for us, there were certain things we missed and the platforms out there that we thought, let's just build it ourselves, but better. And that's what we did. It's if we talk vision, my vision is we have multiple companies, and one of them is Profectus AI, right? Our software platform. And a lot of people will build on that platform, build great strategies. Eventually, it becomes very interesting if those strategies are getting funding, right? And that's also how I got introduced to Darwinex. It's like Darwinex has that infrastructure. So we don't have that infrastructure. So we have a lot of capital with the investment vehicle I run. We have a platform where people learn how to build, but we also have the platform Profectus AI, where you build the strategies. So you have it's like a triangle. You have the knowledge, you have the capital, and you have the building platform where a lot of strategies are automated, like thousands a day soon, right? That's worth a lot of money. And we use Darwinex as the infrastructure now. So it was always in my mind, like, I want to have my own platform to allow that. So we can, it's like a sort of a prop firm, right? We use our capital, but also investor capital to invest in talented builders on our platform. And we use the Darwinex infrastructure now to do it since the past few months, right? So it was always there.
Sorry, dude, carry on.
It was always there, that vision to just have the network effect, right? Build the best algorithms in the world and do that by just allowing everyone to build. And then you can just pick the talent from there. Yeah, that's the big vision I had, and it's now finally here. So it was always the plan to build it. It just takes a lot of money and capital and energy and time to build a product like that. But we are here, so.
I love that, dude. I mean, that whole vision, because you basically are becoming your own prop desk, right? Where you're finding trading talent and you're looking to seed that yourself. That is what a prop desk is, right? Where you seed the capital in-house and you provide that to your traders. But it's such a unique and modern approach where you're kind of saying, I will give you everything that you need. And if you're good enough, you will become part of that circle. Like that's where we're going these days, I believe, with prop desks, hedge funds, all of these types of businesses. It is becoming more digitalized, and you'll probably see less and less brick and mortar funds popping up, and more like yourself, where I'm in the UK, right? But if I'm using your platforms and you go, actually, Kieran's a fantastic trader. He's really consistent. He built some fantastic systems. We've got the money. What's stopping us from working together? Because I'm not in your office, right? Like,
Yeah.
but is that a good business decision, or would you rather allocate capital to the best traders globally? And that's what I love about Darwinex is we don't have the geo restrictions that other funds do, where we only work with people in London or Madrid. We can work with anybody globally and seed them with capital. I genuinely believe that's the direction that the whole industry is kind of moving toward.
Yeah, exactly. Did you publicly announce the index already for Darwinex? Did you guys do
Yes.
that?
Yeah.
Live?
Yeah. You can
Cool.
feel free to talk
All right.
about that. Yeah.
All right. All right.
I love
So
I love how you double check. Yeah.
yeah. So it's funny because Darwinex invested in that one algorithm of ours, 500K or something, or not Darwinex itself, but like it's has that allocation. But
Yeah.
also I allocated 1st of September 500K to that index, right? So
Yeah.
we have like a two-way street. So if you
Yeah.
increase the allocation to us, we can just match it, and that it's just a beautiful environment we are creating here. I think it's special. It's finding talent worldwide is the key here, and a lot of hedge funds don't do it. One big thing for me, what I find important is you can also build on another platform, so not on our platform, and that's totally fine. But if you build on our platform, and we know that, the benefit there is that we know that the code is solid and how we like it, right? So if you
Yeah.
are a developer building an algorithm, and then you ask me, Max, can you invest in me? Because I have a good track record. I don't know what is in the code, and I
Of course.
shouldn't know because this is your strategy. And with Profectus, that's the same story. But I know that the building blocks of code are built following our criteria, right? We know
They're
by
clean.
now. Yeah, right. So it helps us a lot for sort of fact checking, like, oh, it's built on Profectus. Okay, it's our blocks. We know how that works, right? So the code is, of course, clean and always the same.
Which I think is when you're operating at such a high level, that kind of thing is super, super important, right? Especially when you're dealing with algorithms, because there's so much that can go wrong outside of the actual strategy. Again, going back to the spread being blown out and stuff, I was affected by that. Not on my main portfolio, but during the testing, which is why I keep going back to it. But there's so many things that can go wrong that at least if you built the blocks that would be in all of these systems and all of these algorithms, like you say, at least you can rest assured allocating capital, knowing that you've safeguarded yourself from various different things outside of the strategy. I wanted to ask, right? You're managing 500,000 at the moment through Darwinex, through the Darwin PYE. Are you managing capital externally to Darwinex as well? You are, right?
Yeah. So we have an investment vehicle to manage capital that will never reach 9 figures, but in the 8 figures is good.
Is that because of the regulatory restrictions in the Netherlands?
Yeah. So we can still scale, but I don't want to do the boring legal stuff, but because annoying me is a lot as well.
The
But
thing is, dude, not many people know about this sort of stuff. So to you, it might be boring, but to other people,
okay.
not many people know.
A crash course in the Netherlands, and probably at least the UK is very similar. But in the Netherlands, it is like this. You have 2 ways of regulation. The first way is the pretty easy way to get regulated for your investment vehicle or your fund or how you want to call it. And you have 2 rules or 3 rules. You cannot market outside of the country. So outside of the Netherlands, we cannot promote it. The second thing is a minimum investment is 100K because those people apparently have the knowledge that they know what a good investment is. So therefore they cap it at 100K. So you cannot invest with 1K or 10K. That's often a question I get. And the third rule is you can not scale above 100 million. So those are, at least when we started, I see a dog. When we got started, and I believe it's still the same, those were the rules. Then you can go for the second level of regulation, the fully regulated um, thingy. And if you do that, then you can scale through that 100 million. You can also attract lower investments, like whatever amount. That's the second level. To do that in the Netherlands, like I hear in the building, multiple funds are located. So I asked around a lot. It costs you a lot of money to get that second stage. And it is not really relevant if you're not near that 100 million mark, right? And if you are there, there are more rules. First of all, it costs you at least 500 to a million. So 500K to a million to get it done properly. And you also need to hire certain people, and it's just a level up, but definitely not necessary to do now.
Yeah, I mean, it's always a goal, right? Like it might not be necessary now, but if you're at 95 million AUM, maybe it's a worthwhile conversation at that point. And at that point, I would presume that you're churning enough revenue to hire these people in, like your compliance officers, your head of regs, and all that sort of stuff, and to be able to pay up front. I think that's similar to the FCA, but I think the FCA make you lock up more capital than that. I'm sure it's like 1 million plus if you want to be regulated to a certain level to take smaller investments than 100,000. So
Yeah,
I think
true.
the kind of process is similar.
Yeah, yeah. It's of course. Is it worth it? And also, can you manage it? For us, it is. We don't know if we can execute properly that lot size, right? If you already, if you blast 100 lots in a market, you think, oh, the FX markets are infinite, like it's an infinite pool of liquidity, but that's not the case.
Yeah.
It's not the case. So if you have to execute 1,000 lots exactly on that price point, even though you have not a scalping strategy, we don't have any scalping strategies, but even if you have a decent stop loss, still you have the market execution that bothers you. So with an FX fund going, and you use a little bit of leverage, right? In Europe still as well, not much, but it's not that the regulation is that difficult to get. It is, but eventually, yeah, why not get it? It is also, can you grow that big? And is that a goal you have? So now we also approach the crypto market, also the stock market. If we have separate vehicles for that, maybe you can scale way, way bigger. There are, of course, like what inspired me a lot was the story of Jim Simons and the Medallion Fund. That was like what triggered me a lot to pursue algorithmic trading. Look, they managed billions, right? They were huge with algorithmic trading. So it is possible. We just need to solve a lot of problems, and one is execution.
But it's no point worrying about that now until you're closer to the requirements anyway, is it really? Because you'd be wasting time, energy, and money trying to, because I had these conversations a lot, as I'm sure you can imagine, in the Darwinex Zero Discord, where people will ask me very advanced questions, and I'm like, hey, that's not your job to worry about this right now. We're talking maybe 5-10 years down the line. So I had a conversation once with somebody who was asking how they could raise their alpha cap from like 10 million roughly. And I was like, you've been trading for like a month or two and building your record. Don't be worried about a 10 mil alpha cap. That's going to take you years to get to that point. Let's focus on trading today and doing the right thing so that one day when we have that conversation about the alpha cap or the 100 mil AUM or the regulations, at least you're at that stage in your journey where it's relevant, right?
The saying I always use is it is who you know and not who you are, unfortunately. So if I ever have a capital problem regarding we cannot execute anymore, then I'll just call fund managers that solve the problem, right? If you get to that stage, you know everyone. I already know everyone, and I'm not at that 100 million, right? At least in the building. I'm not like I know everyone, but in the building, there are so many that solve that problem already. So when you're there, you are probably, unless you live somewhere in a tent, somewhere very far away because you want to live there, then maybe you don't know or cannot find the answer. But most problems are already solved, so don't focus on that too early.
It's kind of poaching the knowledge off of the people who've taken those steps and figured it out before yourself in it. Which brings me on to a little bit of fun here. Can you give us a 360 spin around on your camera at the office? So I said at the
We
beginning,
can
I've already had
we
this
can
right.
do that. Yeah, you already got this. So we have the famous ticker there. There, can you see it? It's pretty
Yeah,
good,
yeah,
right?
yeah, I can see it. Yeah.
We have the big
Just looks
screen there.
awesome, man.
We have some news there. We have some setups here. There are some guys next to me, so I'll save them the.
Yeah, you don't want to put them on on the podcast.
Well, we can do, but they're fun people. I like them, but
It just looks like the perfect environment to be in, especially like with the trajectory that you're on. Yeah, at this point, you're not just some retail trader. Again, like I said at the beginning before we jumped on, like me in my bedroom, right? You know, you are a professional managing live capital. You've got the licenses, you've got everything in place. You kind of need to be in that environment to thrive because, like you say, having so many fund managers around you who've already battled through the problems and the issues that you will face, at least you've got them to lean on. And as long as you have good relationships with these people, you'll always be able to pick on their knowledge, right?
yeah, it's maybe back to your ego point. It can easily hold you back if you don't ask others, right?
Mhm.
Uh, make your mistakes, but not all the mistakes you make have to be made, right? Sometimes just move the ego and go to people, because I can go to someone and maybe my strategy is better, but maybe their experience is better to execute it. Like if that's something.
Mhm.
For us, most of the lessons were not in building strategies, but more in like the infrastructure. What do you need? And that held us back a lot. A lot of issues there we had. If you really want to scale and you have that infrastructure, well, that's required. Trading itself, if you're new to trading or you have been trading for a while, the first thing to solve is be profitable. When you are there, then your second issue is probably capital. Well, then you fix that, and then you have capital. Then maybe you need to think about the structure to do it well and professionally. Well, okay, fix that, and then you build a portfolio. You have to fix that in the infrastructure. Like you have a lot of obstacles to go, but it will be overwhelming if you try to solve it all at once. And you don't have to.
I actually was thinking about this morning after a conversation with somebody in the Discord for Darwinex Zero again. I sort of said, get profitable and you'll be surprised at the amount of doors that open for you. And it's kind of going back to what you're saying now, where your first problem is getting profitable. There's no point worrying about how much capital you're going to raise, the infrastructure that you're going to use to manage capital, or any of the other million issues that you're going to run into in this journey if you're not profitable. But as soon as you're profitable, the doors will start to open. People will be willing to have conversations with you, not just to help you, but to connect you with the right people. As long as you've ticked that first box. And then the second box, if you're profitable and you've got the capital, people will be willing to introduce you to the correct, regulators or whoever it may be, because you've got that box ticked. And it's all about, like you say, again, going back to the logic flow. It's all just a flow of logic, right? If this
Yeah.
happens, I'll move on to this. If that happens, I'll move on to this. So that's super important for people to remember, is don't run before you've learned how to walk. Now we are coming to the end, but I've got two more questions that I want to ask you. The first question is, and we have sort of touched on it slightly, what are your main short-term goals now, and what are your main long-term goals as a fund manager?
So short term is getting a lot of knowledge about how to take the same approach of building algorithms on FX and now crypto. I studied well, and we solved more or less all the infrastructure things we needed. Now for me, it's to see if I can also do the same thing in the stock market. So that is one short-term goal I have. And building a wider portfolio is the short-term and longer-term goal I have now. So growing Profectus AI, having more people built on the platform, gather more talent, and then see how I can use all of that talent and build the best portfolio out there. That's my goal.
You'll be
And I
building
think
the Index 2.0, won't you?
I know. Sorry for that. No, but it's a lot of like it's a win-win, right? Everything that builds on Profectus, we
100%.
invest through Darwinex right now. So the the index will be better on your side. My Darwin is also in the index, I believe. So that's funny. And yeah, you have spoken to some traders I know and that have the same approach. They're also probably in the index already. So my benefit is finding more talent, and your benefit is you can allocate more and your platform grows as well.
Mm-hmm. We need good traders. Like we will always advocate good traders coming to us. Like that's what we need, because the better the traders that we have, the stronger our infrastructure is. The stronger our infrastructure is, the more investors will be interested. Darwinex is like a flywheel where you need Darwinex to be doing everything right from a regulatory infrastructure trading perspective. You need the investors to come and allocate as much capital as possible. But then we need the best traders. Without one of those three, that flywheel stopped turning, which is a massive problem, right?
Yeah, the key as well is what I figured out was, if you just trade one strategy and I educate people about that strategy, and well, we all trade that strategy, first of all, it probably stops working eventually. And the second thing, it's, why trade it together if just one person can trade it? So for the platform, it makes sense to have profitable strategies and profitable traders, but also uncorrelated strategies. So everyone is doing something else. And I think automation allows that. Automation, even if I give you one good trading plan, you're probably going to run it differently than I do, because you're going to run more tests, more filters, and then we have sort of the same entry, but different overall management. And that is what you need. You need a lot of traders with independent strategies. And then you guys built a crazy index of uncorrelated strategies. That's the dream, right?
Yeah.
That's
That's the goal, man. It's just keep scaling, because I think you get to a certain level and it's all about scale then, right? Okay, last question. And I know I kind of know what you're going to say already, but if you were speaking to a beginner trader right now, what is the biggest piece of advice that you would give to them?
Good question. There are a lot of mistakes you should make, I think. So I don't want to have that beginner trader and then keep him from making certain mistakes. But I would really dig down on, is the strategy that you trade really what you think it is? So is it really profitable? Is it really tested well? How subjective is it? How mechanical is it? Can you back test it? If you manually test it, okay, how much emotional bias is in it? Just really know that you are fully focused on something that is really, really good and profitable. That is, I think, where a lot of people make or waste a lot of time. Because like I said, I don't care about how I trade the markets. I find an ID, test it, if it works or not, I throw it away or use it and spend time on it. Really value your time. I wasted so many years on certain strategies. It worked out, but I think it's a very low probability that you find something good. And if it's your first strategy, then you need to be very lucky, or you might need to move to another strategy. That is just the honest view I have. So beginner trader, you can still have the best routine. Your psychology is great. You never make a mistake, but what you're doing also need to work. So that would be my advice, to really dig down first on what you're trading and then solve all the problems around it, like executing it well and all of that.
Perfect. I mean, it's completely different to what I thought you was going to say. I thought you was going to say
Really?
use Profectus and automate everything.
Well, that is what you will figure out.
Oh, true. You come to that conclusion anyway, right?
Yeah.
But dude, it's been an absolute pleasure. We have come to the end now, so I'm going to let you go and get yourself immersed back into that big room of yours. It's been an absolute pleasure to have you on and have this chat, and I'm sure you and I will have another conversation in future, because I want to pick your brains on some stuff, especially regarding the crypto market and being able to trade that in the stock market also. But yeah, I just want to say a massive thank you for jumping on. You provided a tremendous amount of value, not only to our viewers, but also to me. So I just want to say a huge thank you. And yeah, keep it real, dude. You're doing great things.
Thank you. Yeah, it was a pleasure to be here. Love what you guys are doing, and keep on building.
Awesome. And hopefully we'll see Index and PYE keep growing together.
Yeah, we will wait for it.